There are different philosophies that investment managers adopt while investing funds. Broadly, they can be categorized as the growth philosophy and value philosophy. Now, that's what we're going to look today in our discussion. But first, a small story. Long ago, there lived a very barbaric king, and his kingdom was ruled by the rule that he prescribed. So whenever justice needed to be delivered, he had a very unique way. In the public arena, where everybody gathered to watch, he had two doors that led to two separate rooms. One room had a lady, which the person, if he chose, would have to marry that lady. And the other door led to a very hungry tiger. And if he opened that door, he would eventually get killed by the tiger and eaten by the tiger, so to say. The logic was that if that person was guilty, he deserved to be eaten by the tiger, and if he was not guilty, then he gets to marry the maiden. Now, this was how the justice was meted out to people, and of course the rooms were guarded, no way to know what is on the other side, and they kept changing the tiger and the lady from different rooms, so guessing was difficult. In due course, the king discovered that his princess of the kingdom had fallen in love with a commoner. He was very angry. So he filed a false charge against the commoner and had the commoner arrested. On the due date, the commoner, fallen in love with the princess, came there, and he had to choose between the two doors. One door leading to a maiden and the other door leading to the tiger. The princess, his love, had in the meanwhile found a place from where she could indicate to him which way to go, and she also understood that there was no way she could save him, because the lady on the other side was actually her rival for the affection of her lover. So as the young man looked up to the princess, she indicated that to open the door on the right. Now he goes ahead and opens the door on the right, and the story stops there. Because if you look at it from the princess's perspective, and that's where the story pivots, from the princess's perspective, whether he opened the door on the right or the left, he is anyway not available for the princess. He has to marry the maiden, or he has to get killed by the tiger, one way or the other. So the point which I'm trying to make is that anytime life is all about making choices, whether you choose the growth or the value philosophy, I'm sure that philosophy will work for you. But let's get on with our discussion on growth and value. Growth philosophy is nothing but investing in companies and businesses that are already doing really, really well, or likely to grow at a much faster pace than the average of the market. Typically, these are companies which are trying to grow a new type of business. Could be technology companies as we speak in today's day and age, or could be something else. But these are companies that are scorching a new pace of growth. They're growing their businesses, top line. Sometimes they do it even at the loss of profit. Their top lines are growing, and then they come back to make profits. These are very, very high valuations that these companies enjoy, and their price to book value is also very high. Now, these are growth companies that one needs to look at, and recent examples are these IT-enabled companies like Zomato or Nika or any of them that have come into the Indian markets are all perfect examples of growth philosophy stocks that one may need to look at. Now then, what is value? Value is nothing but listed companies or companies that are already in the stock market, which for some reason or the other are undervalued relative to their value, their book value or their business potential. The value that they are traded in the stock market is considered lesser. These are what we call the value stocks. Now, the reason they are lesser looked at in the stock market is because they either have a very predictable business model or they have a model that's nothing exciting for the investor on the other side. So investors don't look at these very favorably, which is why sometimes value stocks have deep discount to the market. Sometimes it can also be that one of the businesses is going through a difficult period and coming out of those difficulties, and the market is yet to take recognition that that business is coming out. So the valuation doesn't reflect the true potential of that company. So these are all examples of value stock. Now, what should one be investing? Should one be investing in growth philosophy, or should one be investing in value philosophy? There are lots of different mutual funds that focus on growth philosophy and value philosophy. So it's important as investors to understand what is growth and what is value. Now, here is an example of what I think one needs to look at when one is looking at growth. When one is looking at growth, one needs to be mentally prepared that the companies or that fund is going to be very volatile. Growth companies are very, very strong growth potentials, but they also get impacted by news flow. So if there's a great news, the stock will go right up. And if there is a negative news on that company or that industry, the stock will plummet. So you must have a strong heart before you invest in a growth philosophy company. Second, growth philosophy companies are scorching ahead 100 kilometers per hour. They don't have spare cash. So you shouldn't expect great dividends from them. You shouldn't expect a lot of payouts. So there's nothing that's going to come to you in the immediate term in any significant way. These are companies that are focused on their growth. Every rupee that they have, they will deploy to grow their business. So you are essentially going to look at a long-term growth of your value of investment, not a current payout in that sense. Third, these are companies that are in different new domains. They are not the traditional companies. They are not something that you will easily enter. They are not the usual manufacturing businesses. So sometimes you may need to invest your expertise or learn from others the potential. It's not easily visible. So if you're willing to do a lot more homework before you invest and learn new things, growth kind of investing is perfect for you. But if you want to use what you've already learned, maybe you have to wait a bit more. That's for growth philosophy investing. Now coming to value, what is interesting about value is that value philosophy companies, because they're undervalued, tend to kind of pay out a lot more. So there's a lot of current income. So you get a good dividend year on year. The dividend payout is reasonably healthy in these companies because that's the only way they can attract investors. Value philosophy companies tend to have a lot more healthier cash outflow to the investors. Second, these are traditional businesses. They are usually, in the Indian context, they are manufacturing businesses with a clear 5-year outlook of how they're going to grow. Very, very stable businesses, nothing very surprising about it. So the stock prices rarely are very volatile. They neither go down very much, nor do they go up very dramatically. So it's a good place for investors who are seeking stability and not a very, very large volatility. And third and last is that you don't need to be a great expert. You just need to be able to read your balance sheet and P&L, and there can be great buys. Value as a theme has been around for as long as investing, and some of the biggest investors globally are value investors. Warren Buffett as an example, or Benjamin Graham, who was guru to Warren Buffett, are all classical value investors. They've gone behind, looked at stuff which are a discount to their intrinsic value and bought them and sat tight till the market recognized. So it's a fantastic way, if you have patience, to unearth value. If you're that person who's willing to do that homework, research, buy and wait, value philosophy is for you. Now friends, often and on I'm asked this question, should I go for growth or should I go for value? Now these will entirely depend upon what kind of a timeline you have. So if you have a longer timeline, then one of this philosophy will work better for you. Depends also on your temperament. Are you temperamentally suited for big volatility, growth is good for you. But if you're temperamentally not suited for big volatility, maybe value is a better play for you. And also question of what kind of a goal you have. If your goal is more near term, then maybe a different philosophy will look. So it comprises of a variety of different factors. So I can't give a one-letter word, but safe to say, it may be a good idea for you to combine both. So if you're somebody who's looking at aggressive growth and willing to invest for a long time, maybe you must have a larger chunk in growth philosophy investing, but also keep some small amount in value funds. That way you will get best of both worlds.